Hello and welcome to Honolulu to PTC 24. I am now joined by Chris Moon, Managing Director for DigitalBridge Credit. And Chris, pleasure speaking to you.
You as well.
We've written quite a lot of articles where there's a lot of quotes from you, but before we get into what's happening in the market and what you're working on, how's PTC treating you? This has been an in and out for you, but how's it been?
It's been a phenomenal week, seen a lot of great customers. It's really been one of the most energizing shows that I've been to in the last year, and it's a mainstay for us. We'll be here again next year, and having a great time.
It's a yearly fixture. It's a calendar fixture.
It is the fixture.
It's the best event around. Speaking now about credit, so your side of the pond. In a scenario of like rising rate environments, how do you guys see digital infrastructure private credit within the current context of everything that we're hearing about the world?
Yeah, I think for us, we couldn't be more excited about the opportunity in credit. There is a very underserved part of the capital structure that has historically been served by banks, and the banks have done a great job serving that part of the capital structure. But we're in particularly with some of the tailwinds that we're seeing in this industry, it's really requiring not only everything we've got from the banks, but a lot of additional firepower from institutional capital, and we're able to tap into that and harness it in a way that's really effective for the industry at a moment in time where we're seeing demand in all of the sectors grow exponentially. So we're incredibly enthusiastic about the product. It's been very well received. We've had a lot of really good transactions that we've been able to be a part of so far, and we're looking forward to a lot more.
Okay. And then picking up on some of the topics here at the conference, geopolitics has been huge.
Yes.
How do you feel what's happening around the world is going to impact access to credit? And maybe it's easy to split that into regions. Just tell us about your thoughts.
Yeah, I think it's going to continue to be, it's disrupting the flow of credit without question. And so, in our minds, this is when, sector expertise and personal relationships really come into play, because it allows us to go find those best-in-class managers of assets, that offer differentiated services to their customers. And, we find if you follow that model, you're a little bit less disrupted by what's happening in the macro picture or the geopolitical picture. But without question, the world's changed. And, in the moment that Russia invaded Ukraine, the credit markets have been trying to find their footing, and we've been fortunate to be a good, part of that solution. But it's very top of mind. We live in a different world, and the world could be materially worse from where it is today, within the span of the loans that we write. So it's really important for us to get it right.
Okay. We were talking to your colleague, John Mock, early on, and he was saying that if you react to something already late, you need to prepare for it.
Yes.
How is DigitalBridge Credit preparing you? What's the contingency plan? How do you envision 24 going? I guess there has to be a lot more flexibility than usually, probably.
Well, when we think about, from a credit product, it's really important to, you've got to picture the world changing, right? So, even if you're underwriting at the top of the cycle or at the bottom of the cycle, if you're going to write a 5 or 7 year loan or an 8 year loan, you've got to imagine the world changes quite a bit. So we try to keep, very steady in terms of, we think about mid-cycle valuations, the way we underwrite, and, we sort of prepare as credit people. We prepare for everything going wrong. That's just kind of the mentality of the way we protect downside, the way we protect our investors. But we have to balance that with being innovative and finding some flexibility so these companies can grow. And I think that's where the relationships and the trust and the expertise really are the kind of the differentiator for us, because it allows us to walk that tightrope where we get what we need, and then also what the companies need so they can grow in this really exciting environment.
And then of course the DigitalBridge logo is one of the most active logos in the 2020s within this sector globally.
Yeah.
Give us an umbrella overview of what DigitalBridge is doing around digital infrastructure credit. What type of investments are you pursuing, and the rationale behind those as well?
Yeah, I think it's similar to the philosophy in the other products that we have at DigitalBridge, which is you find the best-in-class managers, you look for differentiated service offering, you look for teams that are really highly experienced and have a lot of at bats and have been through cycles. That's all really important. So we do the same on credit and the types of things we look for. This year we've been really active in fiber to the home. We've been very focused on fiber businesses in the U.S. that have gotten a lot of traction and connected a lot of customers. as we've seen, the barriers to entry fiber to the home has been quite low. So there's a lot of things that we don't like. There's been only a very few of these businesses that are a little bit more mature that we found to be really, really interesting. We did a large financing for an AI business, and so we think that has obviously got a lot of tailwinds, and there's going to be a big part of what we do going forward. Is a very strategic deal for us. So I think for us, data centers is a big area of activity. I think we'll continue to see some more in fiber to the home. I mean, AI is going to be the theme that dominates, and I think we want to make sure that we're right at the intersection of kind of the tier one physical layer assets that are really making an impact and are run by the best management teams.
You've already mentioned AI, so that was going to actually be my next question.
Yeah.
How are you seeing this opportunity? I mean, we see the slides that sometimes you guys put up on the center stage here, and the numbers, I mean, they're just mind-blowing. It's hundreds of billions, trillions of dollars of needed investment over the next decade, 15 years.
Yeah.
Where's the opportunity? How are you going to navigate that? And how do you see the credit rationale changing on the back of that?
Yeah, so so as credit investors, we have to protect our downside. So obviously there's a lot of stories and enthusiasm around how big the opportunity could be, and what kind of returns that could look like for equity, and primarily that's been backed by venture capital equity and early stage equity. So for us, we focus on the downside, and where we've been really aggressive is on high quality data center operators that are finding that they need additional capital to support these types of tenants, and then these service providers where they have a tremendous amount of asset value, and the key thing, they have long-term contracts from very reliable counterparties, and that's really what we put together and we lend against.
Okay.
Yeah.
From AI data centers to energy, one of the biggest pain points.
Yes.
Sorry.
Yeah.
One of the biggest pain points everyone has here is access to power.
Yes.
It doesn't matter where you are in the world, it is a pain point.
Yeah.
How is DigitalBridge navigating that? Are we going to see you have a stronger role as well in the energy front, more investments, more?
I think it's unavoidable. I think if we can't bury our head in the sand on this dynamic, and you're absolutely right. It is the limiting factor. As we underwrite, it's a dynamic that we try to understand. In terms of is there power allocated already, and that's a lot of diligence that we do on the lending front. But just in terms of our role in the industry as a leader, it's impossible to ignore. And I think the only real way that we continue to move through this and service the kind of demand that we're seeing is if we are using all available sources. So this is going to include green energy, and it's still going to heavily rely on traditional energy. And I think we've really got to push that and kind of evolve the thinking and try to get as much as much as we can put into those facilities. Yeah.
Sorry, you've already mentioned you're focusing a little bit more on fiber to the home in the US.
Yes.
But we are PTC, so Pacific Telecoms Council.
Yeah.
Let's talk about the Pacific, but the other side of the Pacific.
Yes.
What's the plan in terms of credit? What's the plan for Asia, especially Southeast Asia?
So as for us as a credit product, I mean, that's certainly on the radar screen. I mean, there's been a few opportunities that we've looked at in Asia. Just from we're a small team yet. We're still raising capital and we're still getting going. So I would say Asia is probably a little bit far off in the future, but there is no question there is a high demand for credit capital in Asia, and the market needs to evolve. There is a strong bank market. It's very parochial. It's it hasn't innovated in a long time. It's absolutely ripe for disruption, and I think that's on the longer term radar screen. It's probably not something we're gonna really access in 2024, but certainly 25, 26, 27. I see really big things for the Asian market.
Yeah, very, very interesting. And then just a brief overview of the other markets. So Europe, Africa, Latam, Middle East.
Right now we focus all of our time and attention on North America and Western Europe. And to be honest with you, just in those two geographies, we've had more than we can handle. So it's going to be a little while before we make our way to LATAM. Although we look opportunistically there, but really the core for us right now is North America and Western Europe.
Okay, bringing the conversation around almost to closing now. What would be the top 3 tips to people working within this industry that are looking access to credit this year with everything that's going on? How do we navigate 2024?
Yeah, I mean, I think the things that we look for are really important, right? So I would say we like managers that listen to their customers and they're following the customer and they're paranoid consistently about how to make sure that they're serving them in a way that is keeping them happy and they're able to work with them really closely. So we like the teams that have that type of experience. Differentiated service offering is a really big thing for us, right? So there is, there's a lot of, 8,000 something, people attending this conference, lots of different companies, and that's just here, right? I mean, the industry, the players have multiplied exponentially. So I think it's really important to be focused on, creating something that's highly differentiated. And then, the other thing is that, we want to work with people that are, experienced and have, used leverage before, and they know how to be responsible with leverage, and and we're not afraid to be aggressive there. But I think in scenarios where businesses are yet a little undercapitalized, where they should be raising equity and not debt, my advice usually is make sure you've got enough equity to support the amount of debt you're asking for, and that tends to be kind of most of the conversations. But I would say they're not top secret. They're pretty basic kind of blocking and tackling things, and and we're also very good at coaching potential borrowers on kind of what they need. Show me your business plan, and I'll tell you what we can do and what we can't do. And sometimes the advice is, go do this, this, and this, and then come back in a year, and then and then here's what it would look like.
Okay. So last question, from a credit world perspective, so not DigitalBridge credit world.
Yeah.
So we are PTC 24. When we come back here for PTC 25 in 12 months' time, what's one thing that's achievable, but the credit guys need to get their act together to get it done to benefit digital infrastructure?
The one thing that I would like to see this industry needs, more than anything else. I mean, we're looking at, particularly with the AI tailwinds, there is much more demand than there is capital in the credit markets today to service that, right? And so this is why we've created a product where we've evolved into, a new layer of debt capital. The banks and the institutional players need to come together, and we need to effectively, to absorb all this demand, we need to find a way to build these facilities where we can access both the banks and the institutional markets. And we've seen this in a couple deals, but it's not a commonplace. We've seen some JVs that have started to do this, but this is really the way the market's going. And what's difficult is that the banks, the way they lend, they want their money back immediately. Institutional, we lend and we want our money to stay out. So we've got to find structures that work together where you can bring those conflicting objectives together, so that we can fund what the industry needs. Because when I look at these projections, and I've heard it all this week, particularly in the data center industry, when I hear the amount of CapEx that's required to achieve where the industry is going, it's got to require more integration between the banks and the institutional lenders.
So collaboration is going to be the key word.
Collaboration.
I mean, this is not a one man's opportunity. This is going to be a whole community.
We're not here. We're not here to displace the banks. We're here to support and complement what they've already started to do.
Yeah. Chris Moon, Managing Director for DigitalBridge Credits. Thanks so much for talking to me.
Yeah.
As for your home, thank you for watching, and do check our website and social media for more timely news about digital infrastructure from across the globe. At Tech Capital, we lead, we report. Aloha.